Hello, everyone. In this session, we're going to look at question number 5 for management accounting budgeting paper. So let's have a look what we have in this question. That's practice assessment 1 from the A2 website. So if you look at the task 5 is 20 marks, so it's quite a long question we're going to look at here. So we have the first question for 2 marks. Says select the appropriate term to match each of the description. So you have a description here. Detailed budget prepared by functional manager are collected to form a master budget. Now remember that when the budget is prepared by the functional manager, that means it is bottom to up. Functional manager or operational manager are the people who actually implement the budget, who are the people who actually work on that budget. So if the budget is prepared by these people, the functional manager, that means it is a bottom-up budget. And the next one is says a cost that fluctuate in direct proportion to changes in activity. So if the cost is changes with the activity level, we called it variable cost. So if my activity change, activity means the unit. So if I make more unit, my cost will be more. If I make less unit, the cost will be less. So if the activity level change and if the cost is change, that is variable cost. Let's look at the next one. The next one we have here, number B, says calculate the sales revenue budget and production cost budget for April using the information provided. So we have some information here. So you can see here, they said each unit made from 0.85 kilogram material costing 2.5 per kilo. Then each unit require 10 minutes direct labor time, 3,300 hour of basic time. Any extra time must be worked as overtime. Overtime premium is 40% of the basic rate. So basic rate is 15 and overtime premium is 40% extra. So 15 times 1.4, it will tell us how much is the overtime rate. A variable production overhead relates to labor hour, including overtime. Fixed production overhead are incurred at a steady monthly rate across the year. Okay, that means fixed production overhead is fixed. If it is for the whole year, we just need to divide with 12 to find it out how much is per month. So let's have a look. We have a year and we have a month. So we have a year information and we have a for the month of April. So for the month of April, we need to calculate the cost of production. So you can see on April, we have sold 20,000 unit and we have produced 21,000 unit. Okay, so let's find it out, the sales revenue first. So sales revenue for the year is 1.94600. For how many unit? 264. So let's see how much is the per unit. So we said 1,594. 600 for the whole year. For how many unit? 246,000 unit. So that will tell us how much is the selling price per unit. So we do 1594 600 divide 2460 00. That gives me 6 point, that's the produce, it's the sales revenue, isn't it? So you should divide with the sales, not with the produce. So you should divide with 238 because we have sold 238,000 unit and we sold it for 1594 600. So it's a 1594 600 divided to 38,000. So 6.7 per unit, that's the selling price. And if we sold 21,000 unit, multiply by 21,000. So it should give us, so 6.7 times 21,000. That should give us 140. Let's try once again. So we have 1594. So 1594 600 divided 238,000. That gives me 6.7, and we sold for 20,000 unit. Very careful with the number. Don't know why I'm writing 21. 21 we produce, but we sold 20. So times 20,000. That gives me 134,000. So this is my sales revenue, 134,000. I said 134,000. All right, the next one we have here, material. So they're saying here, the material, for the material, it says we need 0.85 kilogram, and per kilogram is 2.6. So for 21,000 unit produce, how many kilogram we need? 21,000 times 0.85. So 21,000 you are producing times 85. So we need 17,850 kilogram, and per kilogram is 2.60 times 2.6. That will give me 46,410. So that's my material, 46,410. All right, the next one we have here, that is direct labor. Direct labor, we have, they said, each unit required 10 minutes of direct labor. 10 minutes of direct labor. So how many units do we have? We have 21,000 units we have produced. So 21,000 times 10, that will give me the unit. We have to divide by 60 to find the hour. So 21,000 unit times 10 minutes, divide 60, that gives me 3,500 hours. So I need 3,500 hours. But the question said 3,300 is the basic. So if 3,300 is the basic, that means 200 is overtime. Okay. So 3,300, the basic rate is 15 times by 15. And the overtime rate is 15 times 1.4, because 40% extra. That will be 15 times 1.4, 21 overtime rate. So times by 21. So 3,300 times 15. So that gives me 49,500, and 200 times 21, 4,200. So 4,200 plus 49,500, that's 53,700. So my direct labor is 53,700. All right, variable production overhead, they said just follow the direct labor. So it means it's a variable cost. So you just need to use the variable cost format. So you can see here our variable cost for the variable production overhead for the whole year for 246,000 units is 95,940. So 95,940 for the whole year. 246 we make. So that means per unit is how much? 95,940 divide 246,000 and times by 21,000 we are making for this year. So times by 21, and that gives me 8,190. 8,190, that's the variable production overhead. 8,190. Then you have a fixed production overhead. The question states the fixed production overhead is fixed. Fixed production overhead are incurred at a steady monthly rate. So the total for the whole year is 96,000. So 96,000 divided by 12. 96,000 divided by 12. So 8,000 per month. We say 8,000 per month. And that's it. If we added all of this, that will be our total production cost. And that will be 116300. All right, that's it. The next one we have here, you have submitted a draft operating budget to the budgeted committee. The committee has asked you to budget for an alternative scenario and calculate the increase or decrease in expecting profit. Okay. They're asking for an alternative scenario. So let's look at the situation here. Assumption in the first scenario, material and direct labor are variable. Okay, depreciation is a step cost, increase every 6,000 unit. There is allowance for an energy price rise of 7.5. So if there is energy price rise more than 7.5%, there is allowance for that. Then we have alternative scenario. So that's the first scenario we have, and then alternative. Increase the selling price 5%, reduce the sales volume 8%, and revise the energy price to 10. Okay, so you have to revise it. All right. So let's have a look. So you have a first draft, and you have alternative scenario. We need to follow mainly the alternative scenario here. So sales price per unit 12. They're saying it will be increased by 5%. So 12 times 1.05. So 12 times 1.05. And that will be 12.6. So this is my first selling price, alternative scenario. So 12.6. Increased by 5%. Sales volume, how much will be the sales volume? They are saying sales volume will be decreased by 8%. So reduce sales volume by 8%. So now we have 80,000 and it will be decreased by 8%. That means it will be 92%. So 80,000 times by 92%. That will give me 73,600. So 70,600. Then you have a sales revenue, just multiply with these two. So 73,600 multiply per unit 12.6. So that gives me 92,7360. Now we're coming to the cost. They said that's the sales revenue actually. Should be here. Okay. Then you have a material. They said material and labor is the variable cost. So let's do that. So material and labor is the variable cost. So material we have 392. So 392,000 for how many unit? For 80,000. Divide by 80 times by 73,600. For the 73,600, how much it will be? So 392,000 divide 8,000 times 73,600, and that gives me 360,640. 360,640. Okay. Same way for the labor as well. The labor was 224,000 divide 80,000 times by 73,600. So we have 224,000 divide 80,000 times by 73,600. That gives me 206080. Energy. The energy we have here, that is, the question said energy price need to be revised, and we have allowance. Very careful with this one. If this comes in the exam, you need to know how to do it. So energy we have 43,000. So 43,000 you have to write first. Then you have to multiply with the allowance that will be in the top. So 7.5% means 7.5 divide 100. So plus 1. So that means it is 1.075. So rise of 7.5. So that means if it increased by 7.5%, that means it's 1.075. And here is a rise to 1.10. Because 10% means 0.10. If I add 1, so 1.10. So it will be 1.10 times 43. So it will be increase, isn't it? So sorry, it will be other way. So it will be increase, not decrease. So we have 43,000 times, it will be 1.10. On the bottom, it will be 7.5. So 1.075. 1.10 divide 1.075 times 43,000, and that will give us 43,999.9. So it's a 43,000 because 43,999.99. So 43,000. 44,000 actually, not 43. Is 43,999. That means 44,000. 44,000 will be here. All right. Very careful with this one. The allowance. The allowance will be under, and revised one will be in the top. Okay, the next one we have here, the step cost. There's a depreciation in the step cost and increase at every 6,000 unit. Okay, so let's have a look how many 6,000 we have in 80,000. So 80,000 divided by 6. So 80,000 divided by 6,000. So it's 13.3. So that means we have 13.3 means like even up to 13 is one steps, and after 13 is the next steps. That means for every 6,000 it will be increased by the same amount. So how much is the depreciation? 42. So 42,000 for how many steps? For 13. Actually 14. 13.3 means 14. 42,000 divided 14. And that gives me 3,000. So the step cost is 3,000 for every 6,000 unit. So for 73,600 unit, how many are steps here? So let's have a look. So 73,600 divided by 6,000. 73,600 divided by 6,000. So we have 12.2. Remember that even 12.2, that means it's 13. Because up to 12 is a 1. If it is crossed the 12, then we have to go for another step. So I'm sure you know like how to do the step cost. The step cost means it's a fixed up to a certain level. After that is increased for another certain level. So 13 steps I have. So 13 per steps is 3,000. So for every 6,000 unit is 3,000. So 3,000. 13 times 3,000 is 39,000. We have a 39,000 here. All right, then we have a total. So the total is 64,9720. gross profit, that is total cost from the revenue. So the difference is the gross profit, 277,640. Increase and decrease in the gross profit. So with the first draft, our gross profit was 259,000, and with the alternative 277. So the alternative is more, isn't it? So increase by 18,640. So this is the difference between the gross profit of first draft and the alternative scenario. So the alternative scenario is much better because the gross profit will be increased by 18,640. All right, very good. So let's move to our next one. The next one, we have a question number 6, and this question from the variance analysis. Let's quickly have a look at this question. Select the appropriate term to match the following description. A financial measure of the difference between the budget and the actual performance is variance. Remember that the difference between the budget and the actual is called variance analysis. Let's look at this question. The next one is says the operating statement for October showed the direct raw material cost 142,560 is the cost for the direct material. 9,900 kilo of material were used and 6,000 items were made and sold. The standard cost allow 1.6 kilogram for each unit, and standard price is this. Okay. Complete the table of the direct material cost, indicate whether each variance is favorable or adverse. Okay, so you have a flex budget, a standard cost. So how much the cost supposed to be based on my plan? So let's have a look. I make 6,000 items, so 6,000 items, and each item should take 1.6 kilograms, so 1.6. So I should use how many kilograms? 6,000 times 1.6. That is 96,000 kilogram I should use. And per kilogram should cost me 14.50 times 14.5. So my total cost, standard cost, supposed to be 139,200. So it's supposed to be 139,200. The next one, it says actual material price per kilo. So how many kilo I have used? Actual. So actual used 9,900 kilo, and the total I paid 142,560. So 142,560 total actual cost for actual 9,900 kilo. So how much is the cost for actual per kilo? 142,560 divide 9,900. 14.40. 14.40. All right, the next one we have actual material used per item. Okay, actual material. So how many unit we have actually made? 6,000. For how many kilo? 9,900 kilo I have used. Kilo we use for how many unit? 6,000 unit. That will tell me how much material I have used per unit. So 9,900 kilo for 6,000 unit. So I have used 1.65 kilo. So 1.65 kilo. Then material price variance. Let's have a look at the price variance. Price variance is all about did I pay more or less per unit. Now, if I use 9,900 kilos, so 9,900 kilos should cost me 14.5 per kilo. So 9,900 times 14.5 should cost me 143,550. But actual cost is 142,560. It is less than my plan, less than the budget, 142,560, and that saved me 990. So my actual cost is less than the budgeted, that means it's favorable for me, it's good for me. So 990, and it's favorable because the actual is less. Then we have a users variance. Users variance we have. So 6,000 items, 6,000 kilo, and each item should take 1.6. So 6,000 times 1.6. It should use 9,600 kilo, but I have used 9,900 kilo. So that's the difference. So 9,600 minus 9,900. So 300 kilo, I have used more than the plan. And the per kilo is standard price is 14.50. Remember, always multiply with the standard 14.5. So that is 4350. This is the adverse. 990 was favorable, isn't it? It was good. So 4350, this is adverse, because I should use 9,600 because per kilo is 1.6, but actually I have used 9,900, so 300 extra, and per kilo is standard 14.5, so I have spent 4,350 pound more. Cost variance is the difference between these two. So favorable is 990 and the adverse is 4350. So the difference is still adverse because adverse is higher. For that reason, adverse will be still here. And the difference is 3360. 4350 minus 990. And what is the percentage? So the percentage over the standard cost. So 3360 divide the standard cost was 139,200, and that is 2.4%. So we have 2.4%. That's it. All right, let's move to the next section. The next section we have for the labor. So it says standard labor cost of production. Okay. So let's have a look. In the labor, we have the budget and we have actual item produced, the labor hour, and the cost. Standard cost of the production. So how many unit we have produced? So we have produced 18,800 unit, but the budget was 18,300. Okay, so how much it should cost to make 18,800 units? So let's have a look. So first we need to look at standard labor cost of the production. So produce each item, how many labor hour I need. So we can see we need 3660 labor hour for 18,300 unit. So it will tell me how much labor hour I need per unit. So I need 0.2, so 20 minutes to make one of the unit. And how much is the cost per hour? We need to find it out that. So 65,000 is the total cost. 65,880 divide for how many hours? 3660. So 65,880 divide 3660. So 18 per hour. Okay, so now if I like to see for 18,800, so 18,800 unit, how many hours I need? Multiply by 0.20. So I need 18,800 times 0.2. So I need 37,160 hours, and the per hour is supposed to be 18. So it should cost me to make 18,800 unit, it should cost me 67,680. All right. The next one, it says rate variance. So my budgeted rate is 18. And let's have a look what is the actual rate. So for actual, I have spent it 82,720 pounds. For how many hours? 4,700 hours. So 82,720 divide 4,700. So 17.6 is the actual. The budget it is 18. Actually, I can see I have saved some per hour. So I've saved 18 minus 17.6. So 40 pence per hour I have saved the rate variance. So for 4,700 hours, how much we saved? So for the 4,700 hours, I have saved 1,880. Rate variance is all about, did I pay more or less? So here I paid less because my plan was 18 per hour, but actually I paid 17.6 per hour. So that make me save for 4,700 hours. That make me save 1880. Labor efficiency is all about how efficient the employee are. So it means like how many hours supposed to take, but how many hours they actually took. So as we have calculated before, for 1 unit, we should use 20 minutes or 0.20 hour. So for 18,800 a unit, it should take 37,600 hour. But actually, we have used 4,700 hour. So it's actual. So 4,700. So we have used 940 hours more. That's the adverse. And you have to multiply with the standard rate. This is 18. Times by 18. And my efficiency variance is adverse 16,920. 16,920. And the labor cost variance, the cost variance is the difference between the adverse and the favorable. Now, if it is adverse, you need to show in a minus or in a bracket. So I'll show minus here. So the difference between the adverse and the favorable. So we still have an adverse 15040. So this is the difference between 16,920 and the minus 1880. So the difference between the favorable and the adverse. So still it is adverse. All right, so this is our task 5 and 6. Maybe on the next section, we're going to look at our next question. Thank you very much for watching.